morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the energy sector on the Trinidad and Tobago Stock Exchange, as well as a very closely related energy company. And those two companies we're talking about, of course, are TTNGL as well as National Enterprises Limited, or NEL. Both companies would have reported significantly improved performance over their respective fiscal periods. In the case of TTNGL for its 9 months ended September 2021, and in the case of NEL for its 6 months of this fiscal 2022 period. Let's take a look at how both would have fared very quickly and what could be in store for investors in the months ahead. Turning firstly to TTNGL, well, the energy holding company would have reported an earnings per share figure of 87 cents per share, which is a very significant increase of almost 360% from that 19 cents per share recorded in the prior comparable period. That is the 9 months of fiscal 2020, certainly recovering from a very difficult energy period in the 2020 period, or thereabouts. Share of profits from its joint venture, its sole investee company rather, PPGPL, or Phoenix Park Gas Processors Limited, would have increased from 30.7 to just 135.5 million, or 340%. Interest income down, expenses up marginally from 1.1 to 1.5 million, with overall profits after tax attributable to shareholders up from that 30-odd million to 134.13. Now, driving this performance has been a very robust recovery in terms of natural gas liquids prices. And as we can see, there have been actually almost 100% plus increases in prices period over comparable period in most of the natural gas liquids that TTNGL, by virtue of its investment in PPGPL, produces, that is butane, propane, and natural gasoline. In the case of natural gasoline prices, weighted average prices for the 9 months of 2020, or half year of 2021 rather, up to just around $1.48 per gallon. 109% as mentioned from that 71 cents per gallon. Propane prices up 98 cents as well, over 100% from that 43 cents per gallon. And butane prices also increased from 53 cents per gallon US to that $1.09 per gallon. Also another 100% plus increase. When we take a look at production, however, not a very good story as compared to the pricing story. Production and exports down just around 22 to 26% respectively in terms of those production and exports of NGLs from the Trinidad and Tobago domestic economy. In the case of exports, down from 4.78 million barrels to just around 3.53 million barrels in that blue column. And in production, from 5.23 million barrels to just over 4 million barrels. And this is available data from the Ministry of Energy up to August of 2021. So we're looking at that January to August 2021 over 2020 comparable period. So there continues to be some decrease in production and exports. So hopefully that trend will be arrested in 2022 as new gas fields come on stream, and volumes should pick up for TTNGL and the overall energy complex that is the domestic Trinidad and Tobago energy production landscape. Now, at a price of $18.50, well, TTNGL is trading at a price-to-earnings ratio of 25.7 times. It is the only stock on the energy sector of the Trinidad and Tobago Stock Exchange and offers investors a dividend yield currently of 1.6%. Now, investors may be looking ahead with one eye very keenly on the final dividend, which will be declared sometime in early 2022, of course, based on 2021 performance. And with that resurgence in earnings, investors may be anticipating an increase in dividend, and certainly the interim dividend this year would have given investors some hope at 25 cents per share compared to nil in the prior fiscal period. Now, on the basis of those improving energy commodity prices, as well as international growth from TTNGL's international subsidiary, but overlaid by economic uncertainty, and certainly with Omicron emerging as a potential threat to global economic activity, as well as certain changes in the energy landscape, namely the release of strategic petroleum reserves by the US and other energy players, that could throw some additional uncertainty into the energy price environment. And on that basis, Bourse is going to maintain a neutral rating on TTNGL for the time being. Turning very quickly to NEL, the investment holding company would have reported an earnings per share figure of $1.41 per share, which compares quite favorably to the loss of 18 cents per share recorded in the prior comparable period. That is its fiscal 6 months or fiscal half year of 2020 versus 2021. Dividend income was up just around 34% from 3.1 to 4.2 odd million. Operating expenses, however, also climbed from 1.4 to just under $2 million. Operating profits actually declined just around 16% from $5.6 odd million to 4.7. However, there was a very significant gain on fair value revaluations of its investments from a loss of $112 million in the prior comparable period of 2020 to a gain of $843.4 million in the most recently concluded fiscal period. And this would, of course, reflect much better pricing prospects across most of its investment companies, particularly in the energy commodity space, which would have translated into increased valuations of these investee companies. So overall profits or losses profits for the period would have swung from a loss of $107 million to just under $848 million for NEL. Now, when we take a look at the price to book ratio and market price of NEL over the past few years, it hasn't made for quite pretty reading, as at the 6 months of 2021, the share price is hovering at around that $3 to $3.25 per share level. However, from a valuation perspective, using that price to book ratio, given the recent revaluation in NEL's assets, it looks to be of quite considerable value to potential investors, with a price to book ratio of 0.63 times, the lowest it has been in the past 5 comparable fiscal periods, where it was as high as 1.93 times in that 6-month 2017 period, where the share price was just around $10.37. Certainly, investors would be keeping a close eye on NEL and seeing if those revaluations can be sustained with improved and stabilizing energy prices in the coming months, which may guide them as to looking at NEL more favorably from a value perspective as opposed to a dividend perspective, which it has traditionally been viewed as. So at a price of $3.25 per share, NEL is trading at a price earnings ratio of 2.9 times compared to the sector average of 9 times. It offers investors a dividend yield of 0.9%, which is below the sector average of 1.3%. With those stabilizing energy prices and by extension valuations, again, NEL does start to become a little bit more attractive in terms of a deep value stock. However, with challenged domestic energy production and overall domestic economic challenges, again, arising from COVID-19, Bourse is going to maintain a neutral rating on NEL for the time being. But that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at www.bourseinvestment.com. Of course, you can give us a call at 226-8773. As mentioned, that's it for this week. See you next time on the Bourse Report. Stay safe and get vaccinated.